Quiet now, everybody. Quiet, listen to me. We're going to start a show. Now, some of you people have been with me before. You know it's going to be a tough grind. You're going to dance until your feet fall off. You're not able to stand up any longer. But we're going to have a show.
Welcome to the Pink Door podcast.
Absolutely. Welcome in.
So imagine listing a multi-million-dollar luxury home, right?
Okay.
And what the news is basically telling you is one of the most aggressive sellers markets in recent history.
Right. The headlines are everywhere.
Exactly. So you prep the house, you put it on the market, and then, well, you wait.
You just sit there.
You wait a week, then a month, and, nearly 80 days later, you finally close the deal. But you've actually had to drop your asking price by over $100,000.
Ouch. Yeah.
Right? But then meanwhile, just like a few streets over, a smaller, older colonial goes on the market.
Well, I know where this is going.
Yeah, and it's practically mobbed. It triggers this huge bidding war and sells for $75,000 over asking in barely a week.
It's wild. It's a completely bizarre split personality reality in the market right now.
It really is. And today, for you, the listener, we are going to figure out exactly why that is happening.
Yes. We are tearing into the March 2026 real estate data for Duxbury, Massachusetts.
And to really understand what's happening, beneath the surface here, we're looking directly at the MLS.
Right. The multiple listing service.
Exactly, which is the raw feed of every actual home bought and sold, as well as the latest reports from the Realtors Property Resource, or RPR.
Yeah, RPR is great. It's basically the analytics engine that aggregates all this local data so we can see the macro trends.
Because navigating a real estate market, especially a highly desirable coastal South Shore community like Duxbury, it can feel like, trying to read the weather in the middle of a hurricane.
That's a great way to put it.
Right. The headlines say one thing, but your neighbor's experience might be completely different. So our mission in this deep dive is to extract the actual mechanics behind these numbers.
No guesswork.
Exactly. No guesswork. We want you to understand exactly what it takes to buy or sell on the South Shore right now.
So to understand the Duxbury market in March 2026, we have to start with the fundamental engine driving every single transaction right now.
And that is?
Severe scarcity. Just a complete lack of inventory.
Okay, let's unpack this. Because before we talk about how much these homes actually cost, we need to establish how few of them actually exist on the market.
Right. It's all about supply.
So looking at the aggregated RPR data, the metric that immediately jumps out is the months of inventory.
Oh, yeah. That number is staggering.
Right now, Duxbury is sitting at just 1.76 month of inventory.
Wow.
Yeah. So I like to think of it, imagine showing up at a highly rated bakery like 10 minutes before they close.
Okay.
There are only a couple of muffins left in the case, right? But there's a long line of hungry people right behind you.
That is exactly what 1.76 months of inventory feels like.
Right.
Because for context, the months of inventory metric, it's a simple calculation. You just take the total number of active listings on the market,
Okay.
and you divide it by the number of homes that are actually selling each month.
So what's a normal number then?
Well, in a traditional balanced real estate market where neither the buyer nor the seller really has a distinct advantage.
Like where you actually have time to sleep on a decision?
Exactly. Where you can negotiate repairs, think about it for a weekend. In that market, you typically see about 4 to 6 months of inventory.
4 to 6 months.
Yeah. So when that number drops down to 1.76, we're looking at a severe, hyper-competitive seller's market.
But why is it that low specifically in a place like Duxbury? Like, is it just the coastal geography, meaning there's, no more land to build on? Or is there something else keeping people from selling?
I mean, the geography plays a huge role.
Sure.
Established coastal towns just don't have massive tracts of land for new subdivision development.
Right. You can't just throw up 50 new houses.
Exactly. But the more pressing macroeconomic factor right now is the lock-in effect.
Oh, the mortgage rates.
Yes. You have homeowners sitting on mortgages they secured a few years ago at 2.5% or maybe 3%.
Right.
And even if their family is growing or, they want to downsize, the mathematical penalty of treating a 3% mortgage for current rates is just keeping them anchored in place.
They just can't justify the math.
They simply aren't listing their homes.
So the supply is constrained structurally, not just because it's a popular town.
Exactly.
And that scarcity, it forces a very specific mechanism when it comes to buying. which I like to think of as a massive bottleneck.
The bottleneck, yeah.
Like imagine a giant funnel. You have all these buyers pouring into the top, right? First-time home buyers, downsizers, people relocating down from Boston.
All of them.
But the bottom of the funnel, the actual supply of homes, is incredibly narrow.
Very narrow.
So as all those buyers get squeezed into that narrow opening, the pressure just builds up immensely. And the only way to release that pressure...
The only way to get through.
Yeah, the only way a buyer makes it through that bottleneck is by using sheer speed and aggressive financial tactics.
And the data reflects that pressure perfectly. The median days in RPR.
Which is how long a property sits on the market before going under agreement, right?
Yes. That metric is sitting at a blistering 13 days.
13 days, that's nothing.
In the mechanics of real estate, 13 days is effectively zero. It means a house hits the market on a Thursday, they host an open house over the weekend, take all offers by Tuesday at noon, and it goes under contract by Wednesday.
Which completely changes the psychology for you as a buyer.
Completely.
Like, you can't go to a Sunday open house and say, oh, well, let's think about it, and maybe come back for a second showing next week.
No, next week doesn't exist in a 13-day market.
It's gone.
You have to be fully underwritten and pre-approved by your lender before you even step foot in the driveway.
Right.
And because of that intense bottleneck pressure, we see the sold-to-list price ratio sitting at 100.4%.
So 100.4% means the list price isn't really the price.
Not at all.
It's just the starting bid.
On average, yes.
Okay.
Buyers are paying a premium over the asking price. But it's really important to understand how they are achieving that 100.4%.
Right. It's not just a bigger check.
Exactly. It's not just bringing more money. In a 13-day cycle, buyers are utilizing escalation clauses.
Which is where you agree to automatically outbid competing offers up to a certain cap, right?
Exactly.
Yeah.
And they are also waiving essential contingencies, like the home inspection or the appraisal.
Waiving the appraisal, that's a huge risk.
It's massive.
Because if you waive the appraisal contingency to win a bidding war, and the bank decides the house isn't actually worth the inflated price you offered,
You are legally on the hook to cover that difference in cash.
which requires significant liquidity.
Absolutely. That 0.4% over asking, on a town-wide average, it represents a highly aggressive, cash-heavy approach to navigating multiple offer situations.
It sounds brutal.
It is a brutal environment for a buyer.
But, here's where the macro data can actually be a bit deceiving.
Okay, how so?
Well, averages are great for the 30,000-foot view, but let's look at the actual specific houses that closed in Duxbury in March.
Let's do it.
When we drill down into the individual MLS records, this fascinating split emerges. It's truly a tale of two markets.
We need to look closely at the single-family properties to see how this plays out across different price brackets.
Right. So there were exactly 6 single-family sold listings that closed in March.
Okay.
The median sale price for those specific homes was $1,722,500,
Right.
with a median of $473 per square foot. Let's pause on that $473,000 a square foot for a second.
It's a big number.
It changes the math considerably for a buyer, doesn't it? Like if you're buying a 2,000 square foot home and it needs a new kitchen, maybe updated bathrooms,
Right.
paying nearly $500 a square foot just for the existing footprint means your renovation budget gets squeezed incredibly tight.
It alters the financing strategy entirely.
Yeah.
When the baseline cost of entry is that high per square foot, buyers who plan to renovate often have to look at different loan products,
Like what?
like construction to permanent loans, or they have to tap into other equity. The carrying costs just escalate rapidly.
So let's look at the contrasting experiences of the buyers and sellers in these 6 sales.
Okay.
On the entry-level side of Duxbury, we have 805 West Street. It's an 8-room, 3-bedroom colonial.
Nice property.
The sellers listed it for $730,000. It sold in just 10 days for $805,000.
75 grand over asking.
Exactly. 75 grand over in 10 days.
And that perfectly illustrates the bottleneck pressure we were discussing.
Yeah.
The 10-day turnaround and the massive over-asking price show exactly what happens when multiple, highly motivated buyers target the exact same comparatively affordable asset.
But then we look at the luxury tier.
Right.
We have 275 Powder Point Avenue, an 8-room, 4-bedroom cape. It was listed for $2.6 million.
Okay.
It eventually sold for $2.4 million, and it took 30 days.
So 200,000 under asking.
Yeah. And we also have 3 Garden Lane, an 11-room colonial. That one sat on the market for 79 days
Wow, 79.
and sold for $2,362,500. which was over $100,000 under its initial list price.
The contrast is stark when you view the raw data side by side.
Okay, but I have to challenge the premise here, though.
Go for it.
We just spent the first half of this deep dive establishing that this is a hyper-competitive seller's market driven by severe scarcity.
We did.
We talked about 13-day averages, buyers waiving contingencies. If scarcity is truly the engine driving everything, how is it possible that the most expensive houses are sitting for months and selling for hundreds of thousands of dollars under asking?
That's a great question.
Like, why isn't the seller's market protecting the luxury sellers?
What's fascinating here is that the market isn't one single uniform entity.
Okay.
It fractures based on affordability and financing mechanics.
Right.
The intense bidding wars, the 10-day cycles, the waived appraisals, that frenzy is heavily concentrated at Duxbury's entry-level and mid-tier price points.
Which is roughly the $700,000 to $1.5 million range.
Exactly.
Because exponentially more people can qualify for an $800,000 mortgage than a $2.5 million mortgage.
The funnel is widest at the bottom.
Yeah, that makes sense.
At the $800,000 mark, you have dual-income first-time buyers stretching to their absolute maximum approval limit.
Right.
You have older couples downsizing from larger estates. You have buyers who are priced out of towns like Wellesley or Hingham pivoting down to Duxbury.
So it's just a traffic jam.
A huge one. When all those different demographics converge on a single listing like West Street, that 1.76 months of inventory effectively feels like zero.
But when you cross the threshold into ultra luxury, the 2.5 million range like Powder Point or Garden Lane, the air gets incredibly.
The buyer pool shrinks dramatically.
Yeah.
Buyers in that tier are often reliant on jumbo loans, which have much stricter underwriting requirements.
You're right. Banks aren't just handing those out.
Exactly. Or they are tying the purchase to the sale of another high-value asset or relying on complex stock portfolios for liquidity.
That's more complicated.
Very. There simply aren't 15 families walking around on any given weekend ready to drop $2.6 million in cash or highly qualified financing.
So the leverage actually shifts back toward the buyer at that level.
It shifts significantly. Because the buyer pool is so limited, luxury properties naturally sit on the market longer.
30 days for Powder Point.
Yep.
79 days for Garden Lane.
And time on market is the absolute enemy of seller leverage.
Yeah, of course.
If you are the only serious qualified buyer looking at a $2.6 million home that has been sitting untouched for 60 days, you aren't going to offer an escalation clause.
Way.
You're going to aggressively negotiate. You have the leverage to force the seller to absorb the market realities and bring the price down.
Because what are they going to do? Wait another 80 days?
Exactly. It is a completely different set of rules being played in the exact same town during the exact same month.
Wow. So if you are listening to this and, mapping out your own real estate plans, that is the vital distinction you need to understand.
Absolutely.
If you are selling a smaller entry-level home, you might be holding all the cards and can dictate terms.
You're in the driver's seat.
But if you are trying to move a multi-million-dollar luxury estate, you cannot rely on the frenzy to bail you out.
Not at all.
You have to price it with surgical precision, right?
Huh?
And be prepared for a longer, more traditional negotiation process.
So if luxury homes are dragging their feet, but entry-level homes are flying off the shelves in 10 days at premium prices, what does that chaotic mix actually do to the town's overall baseline? It pulls the whole median up. The sheer volume and velocity of the lower and middle tiers outpace the slower luxury market.
Which brings us to the big picture valuations from the RPR report.
Right, let's look at those.
When we look at the entire town of Duxbury in aggregate, so that includes single-family homes, but also condos and townhouses, the overall median estimated property value has climbed to $1,196,580.
Nearing that $1.2 million mark as the foundational median for the community.
And the growth rate attached to that number is fascinating.
Yeah, steady.
That $1,196,580 represents a 3.9% jump just from last month.
In 1 month.
1 month. And looking back, it's a solid 6.1% increase over the last 12 months. So looking at this steady 6.1% annual growth, what does this actually mean for you, the listener? Like, are we approaching a natural ceiling where buyers just fundamentally tap out because, wages aren't growing at 6.1%? Or is this just the new permanent reality for Duxbury real estate?
To answer that, we have to look closely at the mechanics of asset inflation.
Sure.
The 6.1% year-over-year growth isn't happening because the local population suddenly has 6% more disposable income.
Right. Obviously not.
It is happening entirely because of the structural lack of supply we outlined earlier.
The bottleneck.
Exactly. As long as inventory remains constrained under 2 months, these high valuations are going to remain heavily insulated against broader economic pressures.
Because even if a whole segment of buyers drops out of the market due to affordability issues, there are still enough people left in that bottleneck to buy the very few homes that do hit the market.
You've got it. The demand would have to fall off an absolute cliff to counteract a 1.76-month supply level. The 6.1% growth is the market's mathematical response to scarcity. Buyers are paying a premium for the asset simply because there are no alternatives available.
What really stands out to me is the permanence of these numbers.
Yes. Sticky.
Real estate is incredibly sticky. It doesn't behave like the stock market, where, a bad earnings report can wipe out 20% of a company's value overnight.
Thank goodness.
Right. Once a neighborhood establishes a new median benchmark, like nearing $1.2 million, every seller anchors their expectations to that number.
It becomes the new floor.
Exactly. Unless there is a massive flood of new construction, which we already established isn't happening in a coastal town.
Right, no space.
Or a catastrophic economic event that forces mass liquidations, that new normal gets cemented very, very quickly.
Sellers simply refuse to sell for less than what their neighbor got.
Exactly. Well, Jim got 1.2, so I need 1.25.
Exactly how it works, which sets up a very complex dynamic for the immediate future. Because real estate is a heavily seasonal industry, and looking at the March data is really just looking at the opening act of the year.
Well, I'll let you take the lead on this final thought because seasonality is going to be the major theme moving forward.
Yeah, I want to leave you with something to really think about as you evaluate the coming months.
Okay.
The data shows that in March, we were already seeing 13-day turnarounds and entry-level buyers paying over asking.
Right.
But there is a crucial wrinkle in the RPR data. The months of inventory actually crept up slightly.
Oh, really?
Yeah, up 4.1% month over month.
Okay, so a little more supply.
It is a tiny fractional increase, but it's an increase nonetheless as a few more sellers start prepping for spring.
Right. Getting the gardens ready, listing the house.
Exactly. So the real question is what happens when the traditional peak spring and summer buying season actually arrives in May and June?
When everyone wants to move.
Right. We know more buyers will enter the market as the school year ends. So will that tiny trickle of new seasonal inventory be enough to finally cool the frenzy and give buyers some breathing room? Or will the massive influx of peak season buyers just crush that new supply and throw more fuel on an already burning fire?
That's the million-dollar question, literally.
It is a delicate tension between rising supply and rising seasonal demand. And whichever force proves stronger will dictate the reality of the South Shore market for the rest of 2026. What stands out to you about these rising valuations?
If you have any questions about this episode, or if you are thinking about buying or selling a house anywhere on Boston's South Shore, from Southie to Sagamore, give Jim Aldred a call. He would love to speak with you. Jim believes that people in transition often feel anxious about buying or selling a home, and he provides them with the guidance and security to help your family move on smoothly. Thanks for listening, and catch you on the next episode of the Pink Door Podcast.